Well, good morning, everyone. Welcome to our Friday morning trading room. Oop, just a moment here. Got to get the screen share. And because it's Friday, you know what that means. Yes, that's right. It's Rabbit Hole Friday. Now, I have to admit, we're starting to run a little bit thin on our rabbit hole subjects. For those of you new in the room, typically what we've been doing every alternate Friday is we've been taking a look at other indicators, different indicators and such. Essentially, I'm messing with your mind. These are all things that you really don't need, but hey, we're traders. We can't help ourselves. We have to try to tweak our charts. So I've been featuring different indicators. Here's the problem though, we're starting to, believe it or not, even with all these indicators available to us, we're starting to run a little bit low on on indicators because I do see a few in here that we'll cover still in the future, because actually a lot of indicators are based on the same things. For instance, I could do the ultimate oscillator, but that's really just a variation of MACD. But we're not doing the ultimate oscillator today. I thought we would play with linear regression lines. Ooh, the crowd says, what are linear regression lines? Well, linear regression lines it's a statistical model. And essentially a linear regression takes the data and it tries to plot where the data should be. Because it's statistical, it has a slight interpretive value to it. You can see it's almost like a moving average line in a way, except it's a very, very fast moving average line. I worked with a fellow years ago who loved linear regression lines. And not to discourage you, but just a moment here, I'll see if I can find one of his charts. His chart is usually the chart I show. Where did I put it? It looked something like this. His chart is usually the one I show when I tell people, stop putting so many indicators on your chart. But in the mix here, he had linear regression lines along with a whole whack of other indicators. Okay, so here, let's dial this down. Okay, never mind, we'll do it here on the daily. So linear regression, really, to use it is quite simple. The idea behind linear regression is because it's so fast, it gives you a heads up on what the trend is. And the simplest interpretation of it is when the market is above, you're looking to buy. When the market is below, you're looking to sell. Now, different traders will treat it differently. Some traders will require a whole bar to finish above the linear regression line before they're interested in buying, or a whole bar to finish below the linear regression line before they sell. Other traders won't be quite as particular. They'll settle for the market closing above a linear regression line or closing below a linear regression line and then buying or selling accordingly. Now you can see for the most part, you probably would have done okay. As with all things, there are a few false signals, and this, of course, on the NASDAQ, on a daily chart. I think if you choose to use a linear regression to help you identify the trend, I think you'll be better served by waiting for the bar, a complete bar to form, and then to use that bar as your signal bar. So this now becomes my signal bar, and I have to see the market trade above there, because then you'll avoid this kind of scenario. So this is the bar that trades below the linear regression line. This now is my entry. The next bar obviously did not trade lower. This is the next bar that trades below linear regression. There's my entry. The market did not trade lower. Here's the bar that trades above linear regression, or even this one right here. And then, the market has a little bit of giddy up to it once it exceeds the high of that bar. The thing with linear regression, I suppose, before we got too carried away here, we should have looked at some of the parameters. There's really not that much to play with, except the period size. And by default, everything in NinjaTrader defaults to a 14 period average. The reason they use 14 period is it actually goes back to Wells Wilder. Among others, Wells Wilder, if the name isn't familiar, he's responsible for a whole whack of trading indicators, RSI and ADX probably being the two of his most popular and probably even two of his best. I think he was also responsible for the ATR, the average true range indicator. Anyways, what he did is he liked to follow moon cycles. Yes, that's right. He was a moonie. And since there's 28 days in the lunar calendar, 14 days is half a lunar calendar. The other popular setting is 20. So you can go with 20. The reason a lot of traders like 20 is because there are 20 trading days in a month. And you can see it didn't do that much to the line, smoothed it out a little bit. Got you in a little bit earlier here on this down slope. Otherwise, I think it's more or less the same. Now, linear regression, oddly enough, works pretty darn good. A simple way to use your linear regression is to double up the line. And let me make some changes here. I'm kind of going through my stuff a little bit fast. There's only so much you can talk about with some of these things, but all right, let's make that line green, and I'm going to add another linear regression line. And we're going to make it the same periods. Let's make both of them 20. Oh, actually, I should have made this one green. Okay, so I'll make this one green. And I'm going to displace it by 1 period. And I'm going to make the one which is not displaced, we'll make that one red. Many of you are probably already figuring out what I'm doing here. Did I get it right? No, darn it. All right, we'll make the green one 0. We'll make the red one displaced by 1 period. There, that's better. Okay, so what we've done now is we've made ourselves a very simple indicator, and we can see the cross of the linear regression line. So we know immediately, according to linear regression, when the market has gone bullish and when it has gone bearish at that crossover point. Pretty cool, huh? And once again, you can see it works not too badly. There is a little period of chop in here, but you need to remember you got to temper all these indicators that we use with your brain. Sorry, you still got to think about this a little bit. We've got a market which is now in an uptrend. We hit a sideways consolidation period. What should we expect after the market hits a consolidation period? Class? Anyone? What should we expect after the market hits a consolidation period? Yeah, there we go. You guys got it. We're going to continue out of the consolidation, probably in the same direction that we went into the consolidation. So even though we've got the market flip-flopping here a little bit, we got some sell signals. This one most notable, which formed below the linear regression line, did not, well, filled but did not go anywhere. The fact that we had a relatively strong trend entering it, you shouldn't get too keen on reversing signals right away. All right. Now what we do is a lot of times we'll take what we've played with here on a time-based chart. Oh, actually, before we do that, let's go here to let's say we'll look at this on a 5-minute chart. Because we are day trading, and while the end of day information is very helpful, we'll take a look here how it works on a time-based chart. There's nothing wrong, by the way, with looking at the market from different vantage points. We discussed this in one of our Rabbit Hole Fridays, but it's perfectly acceptable to have a time-based chart, or if you prefer tick-based charts, to give you a different look. The mean Renko bars are great. They're very informative, but sometimes a different perspective is helpful also. So currently here, according to the linear regression on our 5-minute chart, let's see, we just opened here. The line on top is what's dominant, right? So if the green line is on top, we're looking to buy. If the red line is on top, we're looking to sell. And so far, that's working not too badly. If we use that as a bit of a clue which way the market may be leaning, then when we go to our tools, whether it be the Raptor or the Hawk or Falcon or Eagle, we can look at our time-based chart and we can say, oh, well, okay, according to the time-based chart, the market's a little bit more bearish. I'm only going to look for sell signals. Well, right away, you have eliminated half of the chance of losing money. If you're looking to buy and sell the market, you've doubled your chances of losing money. I didn't put that very eloquently, but I think you get the point. And it would have worked out pretty well for you here. Look, we get a number 3 signal to short, and the market tails off nicely. You get another number 3 signal to short, the market comes down nicely. So since the open, you had a number 1 signal. It gave you a little bit of heat. It looks like it got down here, kissed the profit target. We'll say we took a break even on that one, but that would have been trade 1. Then we have trade 2, which was profitable, trade 3, which was profitable. So we're trading all of 20 minutes, and we have our 3 trade quota, and we're up $200. Our trading day is done. Now that's $200 per contract. Remember, you don't make more money by trading more often. That same $200 per contract would be $600 if you were trading 3 contracts, or $1,000 if you're trading 5 contracts. All right, so let's take our little model that we have here, and let's see how it works if we apply it directly. And I'll pick on the Raptor here first. If we apply it directly to our Raptor chart. Now this does not always work. And I wonder if I should give it its own panel. Here, let's put it on the chart first. So where are you? There we go. And I'm going to go with the defaults. And I'm going to make the lines nice and bright. Okay, well, it's not too bad to see. Okay, let's dial this back here a little bit. Good, some choppiness. Let's see how it behaves in the choppy zones, because this is what we're really interested in. Once the market is trending, a trending market is relatively easy to trade. Not so easy to trade a choppy market. All right, so, well, let's take it here from the 530 point. Oh, and you know what? The best way to do it is to roll your chart over so you can't cheat. So we're going to play the right edge game, and we're going to advance it bar by bar. Okay, so here it is, 5:30. We're early risers. This is Pacific time, of course. 8:30 in the East. This is the time when we get those pre-market reports. If you happen to be on the East Coast, or you just a very early riser, there's some great opportunities about an hour before the official market open. All right, so here we get a turn. Okay, so now the market's looking a little bit more bearish, and our clouds are starting to cross, so we could look for an early cloud crossover. Okay, so now here's our signal. Technically, this will not print as a number 1 signal, but in essence, that is what it is. The number 1 signal occurs when your clouds change direction. So we had the clouds stacked in a bullish fashion here. They have since moved to a bearish posture, and we've had a pullback, right? Those are the two elements you need for a number one signal. You need the clouds to change direction, and you need a pullback, and after that pullback, the market will try to resume the trend. That is a number one signal. So when you hear me say, I see an early number one signal, well, that's what we're talking about. So here we go. We've got our signal, and we got it. This is how you learn. So you would set this up. You would say, okay, well, how would I cover this trade? Well, there's swing one. Here's swing two. Maybe I'll cover the trade right up here. That's probably, just kind of eyeballing it, that's probably about $200, maybe 200 and change. That is an amount I could afford to lose. That's not going to wipe out my account. It'd probably be about 2.5 or 3% of my capital. And 78.02, I'd be looking for 5 ticks. So I'm down here. Around 97 for a profit target. Let's see now how that worked out. Okay. All right. Oh, it did print as a number one. My mistake. So there's the number one signal. We're in. And we are in. And we are. At this point, I would get my trade to break even or better. It seems to be moving very quickly. Maybe I'd bring it down there. And hooray, we hit our profit target. Okay, so linear regression working pretty well on that particular instance. All right, let's follow it along. Oh, look at that. It hits our high probability profit objective, and then the market turns around. Imagine that. Okay, so the regression lines have crossed. Now we're a little bit more bullish. Don't have a signal yet. Ooh, how aggressive do we want to be here? Technically, the lines are dead even. They're not crossed over yet. Oh, and there they crossed back the other way. So now we're bullish again. Bearish. Bullish. Okay, so here we have now essentially a number two signal. Now, because I'm trying to prove how well this works, I will take every valid signal. So technically at this point, the green line is stacked above the red line. So we do the same thing. I look to buy. Our stops, because this is counter trend-ish, are going to go below the swing lows here. So we got swing one, swing two. They're essentially at the same point. We're in at 78.04-ish. So we need out about 78.09 up here. Let's see how that works. Okay. Oh, it did print as a number two. Look at me. Okay, so we're in. Okay, at this point, I would get my trade to break even. Oh, don't turn around. Oh no. Okay, so we got tagged at break even. And notice now the lines have returned the other direction. So now, once again, we are more bearish. Now the lines are even. Now they're bearish. Now they're bearish. Now they're even. Bear, even. Okay, bearish. Stop losses go up here. Entry is here. Looks like around 78.03. And we need to get down here to about 98. Okay, we're in. Oops, a little bit of a turn. We're in, and we hit our profit target. So that's working pretty darn good, I have to say. All right, let's try it on one of the other toys. Well, here, let's see how it's doing real time. Okay, we got ourselves a number 2 signal. Let's buy in. I'm a little bit late on the signal, but let's just see how it performs. Signal printing right here. See how it performs real time. And this is one of these situations where, you know how I just mentioned to you, if you've got an observable trend, you've got to be careful with the counter trend. But again, when you're testing, allow no exceptions. Take every valid signal and see how it works or how it doesn't work. And admittedly, I'm in a little bit late, but a little bit neutral. The line's kind of even right now. Oops. Okay. Now we're getting the cross, and we should be looking to short. So it looks like the trend is trying to push back at this point. Only good thing about a counter trend trade is you know where your stops need to go. Right there. Okay, so let's see, had I entered on the profit target, or pardon me, on the hash mark at 60, nope, they still would have left me hanging, but I might have had an opportunity to get the trade to break even. Here we would have shorted at 58.75, and oh, they would have made the profit target. Oh, here's now another buy opportunity. Okay, so we've got now a 232 signal, and I'm just going to try a few of these here as they develop and see how they work out, or if they work out. No, see, we're coming back with a number 3 signal. The trend, it's going to move here to the short side. I can almost bet you dollars to donuts. But I'm not asking for a lot either. I'm looking for a little bit of a retrace here to the hard edge. It actually seemed to perform better in that earlier chop zone than in this one. Yeah, here we go. Gonna get tagged again. So the two with trend trades working out very nicely. And once again, you could just use your time-based chart and say, okay, we're bearish. I'm going to look to short today. And just take every sell signal. And you would have done very well. All right, let's play with this on a couple of the other toys. So, hey, you know what? I don't look at the hawk nearly enough. Let's throw it here on the hawk. I may need to change the colors because we got a whole lot of red and green on the hawk already. And we'll make both of them 20. And let's make one of them blue. And we'll make the other one the raptor colors. We'll make it a magenta. Oops. There we go. Violet. Oh. Oops. Wow. Isn't that psychedelic? Okay, so the blue line is our bullish line. The magenta line is our bearish line. And so right now we're looking for a selling opportunity. There's nothing going on. We don't have a signal just yet in our hawk. We're going to anticipate a first micro macro cross. The lines are even here at the moment. We don't have the warning dot yet. We've got the red warning dot, which would be the green bar sell. Okay, well, now we got the green warning dot. We're still in a little bit of a twist here. The regression line is actually pointing down at this point. Okay, well, here was an instance where the linear regression was actually opposed to the first micro macro cross signal, which tends to be a very, very high probability signal on the hawk. Did not confirm the buy signal at that point. Okay, so now the regression lines are suggesting the market is more bearish. Don't have a sell signal. And are we going to get a trend change? There we go. There's a green bar, or pardon me, a red bar buy, which we could short below. That's our first opportunity to sell. Okay, there the regression lines flipped again. So now we're going to be interested in a first micro macro cross. Oh, and now we're not going to get one. Come on, you guys. There we go. Okay, where's that first micro macro cross signal? You got to come back. Otherwise, the regression lines are going to flip over on me again. Oh, they just changed again. Okay, there they go. They're stacked in a bullish fashion. There's my first micro macro cross signal. Get my exit order out of the way for now. And now they're stacked bearish again. So cancel that. So far, it's doing a fairly decent job of keeping me out of the chop. Certainly better than I just experienced on the Raptor. But you have to remember, any indicator you use, well, there's always going to be exceptions. No, sorry, that's a yellow bar. Got a little ahead of myself there. There's always going to be exceptions, right? You'll never filter out every poor signal. That's just not possible. All right, so here we go with a follow-up signal. The regression line still stacked bearish, however. Okay, now we're bearish, there's that red bar buy signal, or the warning dot anyways. We don't have the red bar buy just yet. There it is. There's a completed signal. So if the market trades below the low of this bar right here, I can short it. No, now we're stacked bullish again. Okay. Where's that first micro macro cross signal? All right, there's the warning dot. Nope, there's the yellow bar. That spoils that signal. Okay, so far so good. It's keeping me out of the chop. There's the warning dot. Where's that red bar buy? Okay, now we're low enough. Everything has changed. I can look for the first micro macro cross to short. But the lines have stacked the other way again. There we go. Okay, I'm a little bit late on the entry, but that's okay. We'll snuggle that up a little bit. All right, we're short. Let's see what happens. Get the trade to break even and got the profit target. Nice. Okay, well, that worked not too badly, actually. Okay, let's play with it on the eagle. I forget, did I make the settings different? Well, we'll just leave them the same. Doesn't really matter. Probably got to change the colors again. We got a lot of red and green going on here. Okay. Well, out of the open, let's go back here to the open, and we'll do the right edge game. Okay, so here's the opening buzzer. We're stacked in a bearish fashion. Our clouds are stacked bearish. Where's our first in sync signal? Oh, okay, now everything's out of sync again. Still out of sync. Oh, we got a bit of a convoluted green bar sell there. Let's kind of oh, look at that go. That was a great little move. Okay, so this is our first in sync signal of the day. It's in sync with the band. It's in sync with the regression lines. Now it's out of sync. Now it's in sync again. Okay, and here we go yet again with another signal. The other signals didn't fill. They just printed and then reversed. All right, this one filled. So we're short from here. Ideally, stops 2 swings back. There's swing 1, swing 2. Honestly, that would be too deep for me to cover. I'd probably cover somewhere here around the ATR line. So we're in at 91, and we would like to see 81, which is going to put us down here. All right, at this point, if I didn't already cover the trade before, I would certainly be covering the trade at this point. Okay, so we got to break even. Everything's out of sync. Everything is in sync again. Okay, here's once again a signal where, stop it. This was, it worked out, but at the time the signal printed, the lines were pretty much even. So here we are with a full-on signal. Stops would be up here, and then profit target were 78 down to 73. Oh no, sorry, 10 ticks, 68, which would, yeah, put us somewhere around there. Oh, look at that. They're turning just a few ticks before our profit target. Oh, hooray. That one worked out. Okay, so not bad on the Eagle either. If you're using it as a little bit of a filter to help keep you in sync with the market. Whoa, actually that one really fell off sharply. Let's see now how it performs in the choppiness. So the signal prints, but the lines are even. Okay, this signal printed. We've got a bearish band. The red line is above the blue line. So again, when you're testing these things, try to take every valid signal, because it does you no good to look at it after the fact and say, oh, well, I wouldn't have really taken that signal. Okay, you're only kidding yourself. Okay, so let's see, do we get filled? Oh, and if you have the Bollinger Suite, you can tie it in as well with that. You can say, is it in sync with the Bollinger Suite or not? I've pretty much been ignoring the Bollinger Suite this morning, just looking at the regression lines. Okay, so we're in. Oh, look at that, another couple $100. So out of 2 trades, we're up $400 already. Fred, great point. Fred says, from a trading perspective, I like the Bollingers better. He says, I think gives a much better perspective. And, you know, it's hard to argue with that, because that's why people love Bollingers. It does give you that look at the market. But I have to say, I am fairly impressed with how the linear regression lines have been working here this morning, both on just your regular time-based chart, but maybe more importantly, on the mean Renko bars, how they have actually kept you on the right side of the market. The exception was those couple Raptor trades I tried, both of which I believe were counter trend, which would be easy enough to filter out. All right, one more, and then we're probably going to close up the room here. Fridays, this Friday, the exception. Fridays tend to be rather dull, which is why we started with this Rabbit Hole Friday stuff. Okay, so the regression lines are stacked now more bullishly. This is going to be an early number one signal, or if it takes a little bit longer, it will be a proper number one signal. Everything otherwise is still stacked bearish. Look at this. The Bollingers are full on bear, the Bollinger Suite. The regression lines are bearish again. Certainly hard to deny that the trend is down. And you can see the momentum all came early. Now we're hitting that little bit of a sideways patch. Oh, all right, here we go. We're going to get our number one signal. Or the next buy signal will, in essence, be a number one signal. It'll be that early number one signal. William's asking, Eric, who do I contact for software support? Ben is your man, and you can email him at support@indicatorwarehouse.com. I'll put that in the window for everyone. All right, so there now is my early number one signal. I'm going to take it on the hash mark. And there we go. We're 3/4 of the way to the profit target. I get my trade to break even, and come on, you stinkers. Come on. They're thinking about it. This next signal that prints will be the number one signal. Oh, thanks, Aspen. Aspen says, you will reach the target. You have my blessing. Oh, come on, get up there. This median line giving us a little bit of grief. I don't think it's actual selling going on. I think the buying has just dried up here for a moment. This is why Mark, one of our traders, started taking profit at 17 ticks instead of 20. Because he noted that the market would stall before hitting that 20-tick target. Well, it's a coin toss at this point. Aspen says you're also close to your 33% fib level. Shoot. Well, break even is almost as good as a win. It didn't cost anything. Kept the broker happy, and after all, that's why we're doing this, right? All right, gang. If anybody has any questions, please type away. Otherwise, we're going to call it a day. Have yourselves a wonderful weekend. I will see you again on Monday. Talk to you then. Bye for now.